All right, all right, all right.
Here comes the money.
Here we go. Money talk.
Here comes the money. Money, 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 money.
Dollar, dollar. Dollar.
All right, all right, all right. Good morning. Welcome and welcome back. Come on in, find a seat, take a load off, and let's take a look at what's going on. All right, let's start with NQ, the NASDAQ 100. And we're going a little further out. We're going to start with the macro and work our way to the micro. So we'll start out at a higher level and work our way down into the lower levels. So what do we got on a monthly, 5-year monthly? And the latest candle just came down and touched what is programmatic support and resistance. The magenta line here indicates resistance, as in it was resistant here, came across, crossed over, broke resistance, and tested back, and as a result, established support. Took off, came back down, and what did it do? It's testing support right now, and it bounced. So it came down hard, and it bounced from there, and it successfully tested that support as it stands right now. Now, what is the anchor momentum saying? The anchor momentum is saying weak. It's weak. So you had a day like yesterday. I mean, there was the hope that it would bounce. Well, it didn't quite bounce in the direction that everybody would hope, I guess, unless you're short. But what is it really saying? Well, the red line is coming down, just crossed the zero line. So that's another indication of breakdown or weakness. And you got the green line, the slow line, slowly working its way down. But they're both pointing down, which indicates that we've got continued weakness here in a monthly chart. So I would look for it to continue to work within over the course of the next couple of weeks, which is the remainder of the month, to test within this area. I really don't think it's going to bounce and come back up and work its way higher. I think it's going down. So that's what I'm sticking to. Now on a daily chart, with the programmatic support and resistance applied once again, what do you have? You have a situation, I mean, let's look at tight in, and we have, you may notice the white lines here. That's obviously fibs, but on a lower time frame. But as far as the programmatic support and resistance goes on a daily, you had support here. The yellow line represents support until it broke support here significantly, and it plunged from there. And what did it do? It came down, found another level of support, and bounced higher. You had a higher low here, and that's what led to the big move to the upside. Short covering, news, whatever you want to call it, this was a significant move to the upside, but it's just what I keep saying, too much too soon. Too much too soon. Need structure. Need to backfill, need to consolidate, need to figure out ways to basically adjust to the significant move to the upside. So what is it doing? It's popping and bopping around right now on a daily chart. And it's really in a range of sorts as it consolidates. Significant range in terms of movement. I mean, yesterday NQ was down 500 points or so. That's a pretty healthy move in a day. That's some serious volatility going on. And what else could you say? From the bottom here to the top here. And then you take, I'll quickly see if I can do it. Hang in there. Just quickly drawn a couple lines of what I'm seeing. Come on. Okay, not going to do it. I gotta do it manually. That's not working. That's more like it. Unfortunately, I can't hide those fibs, just for the purposes of looking at this particular daily chart. But what I'm trying to draw here is a flag. So we're going to look for either a break above this resistance, the downward trend line, and then a measured move higher, or we're looking for a breakdown below this lower trend line. And then we're looking for a move substantially to the downside, probably retesting the lows down here. And we could say lows down here if you wanted to. Somewhere in this range. We could get more specific in terms of moving from this particular macro down to a micro chart and see what's going on in terms of this. But that's just off the top of my head, just looking at a potential. Okay, I'm not saying that that's going to be the prevailing pattern, I guess you'd say. So we have the monthly and we have the daily. We've got a macro overview, and now let's go to take a little look at the micro. So let me just go up here. And we'll select the 3-month daily once again, but a 1-day 30-minute. And that's where the Fibonacci's come in. Now, if you notice, I don't have the programmatic support and resistance applied to this. I don't have anything really applied except for the channel, the 233 EMA, and the anchor momentum. But we took a look at the daily already. We know what's there. We could always go back and look. I just want to have a daily chart associated with the 30-minute so that we can see what we're seeing here on the daily chart is the fibs applied to 1 day, which will make sense because this is 1 day 30-minute, and that's what we're applying the fibs to. So let's take a little deeper look. And in terms of daily, well, we really went over it. So I'll just focus on the 30-minute. 30-minute wise, it's really interesting to see how the fibs interplay with price movement. And we're starting out on top on a 78.6. And what did you have yesterday on the open? That significant move to the upside. And you know what? That's not the open. That's it looks like the open, but it ain't, so to speak. It's during the European session. I don't know if there was some news. I'd have to check that. But we got a significant move to the upside and left big topping tails, which indicates what? Selling pressure. There are people selling, maybe to get out. Before what? Before the fall. Because it took a fall. And what do we got here? In terms of, excuse me a second, this would be the open here. Not a good sign when you reach up and touch the underside of the 233 and right in conjunction with the 886 fib. And then you move higher, try to get something going on. And what do you got? It failed. You got a reversal. So you couldn't hold support here above the 233. Couldn't really hold support over here above the 233. And down it comes. And what does it leave? It leaves a significant area for touchback. So even though it plunges over the course of the trading day, what does it do overnight? It starts working its way higher. It wants to come back and essentially retest this area up here and satisfy the touchback scenario of this not having a proper touchback following it right away. So it's just going to wait on a retrace to the upside. And right now, price is fighting the 233. So it's not even able to get back up to the retrace. Or the touchback, I'm sorry. And as a result, it's selling off. Not tremendously so. Yesterday's market-wise was a little bit of a hayride. but we had news. I mean, there's further tariff stuff going on. The Fed comes out, Chairman Powell comes out with a statement that gets people going, apparently. So there's different things that are kind of royal in the market. And the market's very sensitive right now. So you could have a comment made that all of a sudden causes concern and chaos and so on and so forth. I just look at the charts. It's not that I don't pay attention to the news, because the news does drive the market, but I just look at the charts. So what do we got? We got a 1 day, monthly, minute, 30 minute here, 1 day, 30 minute, and a 3 month daily. And we're burrowed in. Now we go back out to the macro and we take a look at something that's been interesting me, which is one of the only bull markets going right now, which is gold. So let's do a switch over to gold. Let's go back to the macro, I'm sorry. And we got NQ up once again. Let's just switch that. GC, gold futures. And what do we notice? Gold's been the ride. This is what you want to stay in. Look at this rise on a monthly. Now to me, it's got structure to it. It's not totally moonshot, but it's pretty damn close to being a moonshot. And now it's outside the channel. This thing's hotter than hell. But it's got to come back. It's got to fill in. As much as it has some structure to it, got a little test retrace here. It's just been making real big moves to the upside. And it can go for as long as it wants, especially when, there's chaos and all sorts of other stuff going on in the financial markets. Gold is a safe haven. Then you have people like Mr. Schiff, who's been calling for gold to really explode for a long time. And I guess he's had to endure, other people saying, "What are you talking about? Gold isn't necessarily going anywhere." Well, it is now. And that's what we're looking at. I mean, it has been. I mean, this is over 2 years. Maybe not 2 years. Coming close to 2 years. Incredible. And the programmatic support and resistance, interestingly enough, we got a crossover here. It didn't get any touchback. It just took off. So in terms of a touchback, we're going to revisit the 2000 level at some point. At some point. Does it always happen? Not necessarily. There's no guarantees in anything. But at some point, I think that this thing comes back down to revisit 2000. Maybe when everything settles down and people get focused on other things and they're not totally focused on the fear and the concerns and so on and so forth. And they won't necessarily be looking at gold as a safe haven. They'll be looking to get their money elsewhere. So we got a daily, and I applied the fibs to the daily. And I left the programmatic support and resistance on there. And what do we got? Well, we got a 50%. We had to break out. We had to retrace back down, touch the 50%, and then bounce from there. Confluence in terms of the 61.8 and these resistance levels here, which it just broke through and didn't touch back. But over time, it came back and touched. Now you gotta have a long-term horizon to basically sit and wait for a touchback before you get in. Excuse me. It might be advised to just go with the ride anyway. Even though it's breaking out and it doesn't touch back, take the ride anyway, depending on what you see. And if we go down to the anchor momentum, what do you see? It's bullish. It's moving to the upside. You've got the red line over the green line. Both are over the zero line. As long as they're both pointed up, take a ride. When the red line cracks to the downside, maybe take some profit off the table. But overall, you can stay in. Now, when the red line cracks the green line, that's when you got some weakness coming in. And that's what we notice here. This is consolidation. It's a retrace. And in some ways, the 78.6 fib is providing support. And then what do? Off we go again. Now, what do we have? We have divergence building in terms of the anchor momentum. You got the green line below the red line, which is a good sign, but it's flattening out. And the red line really isn't going very much further anyway, whereas price was appreciating significantly. And then you had a pretty significant retrace. It retraced hard down. And where to come down to? The trend line, the support and resistance I should say, it's a resistance. And eventually it made its way down below the channel line, based, and then moved higher significantly. Another strong move. But is it strength when it moves like this? Or is it just reflective of fear and concerns and so on? I would contend that this is a move that doesn't necessarily have a lot of structure to it, so it's going to have to find structure at some point. But you know what? You can't fight the move to the upside. You can't fight the emotion of different investors who just want a safe haven, just want a return. They're not looking to speculate and make a killing. They're just looking to get in and feel safer and secure and be able to sleep at night. Down on the anchor momentum, you can see it was a substantial dip, and then it turned right around and just took off. And that's where it stands right now. It's up at the 200% fib, and it's found some resistance there. It's backed off just a little bit. Tested the upper channel. We had the touchback situation where it came back and it touched the upper channel because it broke through. So that could be basing to move higher. But you know what? On the upper channel, I say this thing has some more room to come back rather than move higher. But given the events going on and so on, I'm not saying that we could look at the 5-year monthly. This thing isn't like a bat out of hell. So that's a 5-year monthly and a 3-month daily. So that's the macro. Now we go to the micro. We'll see what gold is doing on the micro. And we got the 3-month daily once again and the 1-day 30-minute. And we got NQ up here, so we got to switch to GC. And what do we got? Well, you can see the strength right away. Look at the channel itself. Look at how these channels are just moving strong to the upside. And you can see price just jumping. It's friggin' leapfrogging the chart. It's just jumping higher and higher. Now I can turn on, go into style here for a second, and turn on extended hours, and it'll fill in the gaps. It's still showing how strong it is. That's what it was on the other chart. That's what we were looking at on the other chart. When I take the extended hours out, all of a sudden it just shows significant gapping to the upside. Is it at a peak? It hasn't reached a 200% on the daily. Hasn't reached a 200% yet on the fibs, but it's fast approaching. The current high is 33.48, and we're looking at 33.60. So you're only 12 points away from hitting that as potential resistance, since it's outside the channel. Possible. Or it just keeps leapfrogging like this, as long as people are rushing headlong into gold because they think it's a safe haven, or for whatever reason they're just rushing into gold because that's what's reflective here. We'll just keep watching it, that's all. I was going to talk about it yesterday, but I just got totally sidetracked into just focusing on NQ, which is my primary focus. But I wanted to bring in gold just so we could look at it and take a look-see and see if there's any potential here. And the potential was here. The potential was on the retrace back down to fulfill the touchback over here. That was your buy point right there. And of course, once again, it's historical, so it's easy to be able to analyze and see. That's where you wanted, oh yeah, that's where I wanted to buy. But did you? No. Did I? No. Did a lot of people? Possibly. Smart, savvy investors. But if I take this like I've done once before, I think. Let's see. I think I screwed it up. Hang tight. Let's take it from here. All right. So here we are. Gold has appreciated significantly over this period of time, which is roughly, I mean, for argument's sake, a couple of months. Okay. Do we know what's happening here? Do we know that we're going up? Yeah, we do, because we already looked at a daily chart and we know it's going up. But if we could somehow suspend our knowledge of what's going to happen after this and just proceed a couple candles at a time, because I can't do one candle at a time for some reason. So we're sitting here. What do we look at? We look at a shallow cross to the downside on the anchor momentum. We look at a higher low. This ends up being a higher low in terms of the red line on the anchor momentum. Or it is it is. It's a higher low. Higher low, off we go. Boom. Off we go. Significantly. So we just do a quick analysis and basically it looks good. Looks like a higher low to me. And off we go. Now what happens after this? It popped pretty significantly. Broke the prior resistance point. So we're looking at a touchback to satisfy that before it moves higher. Let's see what happens. Well, it did kind of cap off at the 61.8 fib. And left a marker that has to be touching back to the 61.8 if it ends up retracing further down. So where do we go from here? I'm going the wrong way. We're leaving, taking off. We're going to leave the touchback back here in the dust. But that doesn't leave it. We got a touchback situation here. And that doesn't necessarily say anything when it jumps up to here, except that at some point, somewhere along the way, these probably, and I say probably because that's what we deal with all this stuff. It's all about probabilities. Possible that it's going to do something, but you have no way of knowing. That's why risk management is so incredibly important. You got to manage your risk. You're taking a risk if you plop your money down. So you got to be able to manage it in such a way that you say, if I'm wrong, I'm out. And if I'm right, I'm loving life and I'm in. So where does it go from here? Boom. Came back down to satisfy here, but we still got this hanging out in the breeze. We haven't satisfied that. Is this enough of a retrace? Well, we can do a little fib and probably see that it does satisfy a retrace and move higher. You got a lot of strength here. Strength in terms of just price speculation pushing this higher. So you got some people taking money off the table after taking a run like that. There's temptation to do that. And you got to search for supply. What are we looking for? We're looking for buyers. Came down and touched the area of the 61.8. Found some buyers and popped a little bit back to the upside, bounced. There's a little bounce right there. So what's next? Okay. Further testing the area. Okay. Higher low, off you go, except that there's overhead supply. There's people left behind on this move to the downside saying, you know what, I think it's coming further down, so I'm getting out here. And you got a little bit of a sell-off. Little sell-off. Nothing major, obviously. But you still have a higher low. So you got a successive series of higher lows. You got a signal that there is selling overhead. What happens? Boom. Big time. Now you have a higher low here, but higher low to what? Higher low to here, to here. In some ways, just a little bit lower than here. A little more consolidation before a big pop. Big in terms of what we're looking at on a daily chart. Now looking at the anchor momentum, what happened? The green line leveled off, not coming down. It leveled off, and the red line staying below. So there's some near-term weakness here, according to the anchor momentum, and that's sure enough what it was. And then the red line breaks strong back above the green line, and they're both well above the zero line. So this is really just what? A dip. Buy the dip. This is the one bull market where I would say that, because there is a bull market right now in gold, you could definitely say. So you're buying a dip. And you're being rewarded. Bam, up here. And what does it do? It comes up and it touches the 100%. Ranging. Not really falling, but it's finding support on the 886. And what's it do from there? Boom. Takes off. You got the green line on the anchor momentum starting to angle to the upside. You got the red line pulling up significantly higher up from the green line. Similar to what happened over here. You got a successive move, and what do you have? Measured move. Here to here versus here to here. So what's it going to do now? I mean, chances are you're saying it goes higher. There's nothing on the anchor momentum saying that it's essentially going lower. I mean, you got a little crack to the downside on the fast line on the anchor momentum. And you got the gap to the upside here. So maybe you have just a little bit of divergence. In terms of this going much higher. And this basically, well, now that I'm looking at it, this is going higher. We're just looking at just what's happening next. You get a little glimmer into the future here, except it's just the way that the charts are drawing. But that's saying a little bit to the downside. Let's see what happens. Interesting. Consolidation. And after this kind of move, I would totally think it would be consolidating. And what it did, it reached up and touched the 127.2. But it's hanging up there. It's not collapsing. So what are you saying? Just bide your time. Maybe wait and take an order above the 127.2 like this happened here. And maybe get in on it. Or is that chasing? And you don't want to chase it. In some respects, you don't want to chase it, except when it's so strong, it's really hard to stay away. I mean, that's where the greed comes in, and the fear at the same time. You can be greedy, saying, "Oh man, I'm going to make a killing on gold." At the same time, be afraid. Say, "I don't know. It's really it's stretched a little thin, possibly." Well, go down to the anchor momentum. Things are still looking pretty good, but you're going to get across to the downside on the red line crossing over the green line. But they're still way above the zero line. So you have bullish momentum going on. Let's see. Boom. So much for analyzing what may or may not happen. This touch up here was touching and saying, oh, we're going down. And that's why the historical is so easy. It's easy to look at it now and say, oh, of course, I would have gone down up here, and it'd be down here, and I'd be loving life. And it'd be a substantial dip. Well, it was a substantial dip. And for gold being so strong. Now, what are we looking at? If we come way back down here to the swing point, and I just throw it a fib, just to see, just a real narrow, and do an actual retrace fib as opposed to a projection or extension. So I go from one swing point to the next. And what do we got? We got significant confluence. We got a 38.2 right here. And it pretty much ripped right through that. And stopped based on this consolidation here. Kind of stopped within that. Because there's still more business that's not necessarily been transacted or done at this juncture. So the sell-off basically benefits from that and slows down and it stops. Here, close it on the lows. That's important too. Now this was a big-ass doji of sorts. What do they call it? A grasshopper, I can't remember the names of these freaking candles. But it doesn't matter. What does matter is looking at the fibs. Now we got a 50% retrace, and we get the 61.8 extension. That may be where it comes down to. That could be the floor. So let's go forward and see what happens. Boom. Didn't quite hold that floor, but it looks like it may be holding on the 50%. That's the Fibonacci extension. And what is that? That's a 61.8 retrace. And that becomes the floor, perfectly coinciding with the fibs. That's why I like fibs. It's just like stairs walking up and down. You just see the varying and assorted support and resistance factors. And what it do? High or low. Sold off again. But it's got a higher low this time around. So what happens next? Well, just looking, we cracked the zero line with the red line, the fast line, on the anchor momentum. And we came down to the low. This current swing low, not the low. Anyway. And now it's showing upward movement. While the green line is coming down. So that green line has to kind of turn and head back up and get the red line back over the green line. And then you got some movement to the upside. But if you're aggressive and you got the cojones to do it, this double confluence of the 50% Fibonacci extension and the 61.8 retrace is a nice floor. Maybe you don't get in right there. Maybe wait for confirmation on the next candle, but you got a higher low in the next candle. So let's see what happens. Boom. Now we're doing two at a time, which unfortunately kind of ruins the effect that I was hoping for, but you get the gist of it. This market is strong enough that it just starts jumping again. And it's just reflective of what's going on. Trade wars, tariffs, that's all the media's talking about now. Are there other things going on? Of course there are. There are always other things going on. Life itself is going on. But when you're embroiled in the financial markets and you got all your money riding on stuff, you're going to be paying close attention to the news, because the news moves the markets as well. So what do we got? We got another move to the upside. Interesting how it's showing significant pressure, or the bears, I guess you could say, pushing price down, and you got the bulls pushing price up, and coming to another doji of sorts. So there's indecision here. There was indecision here. And significant pressure from the bears pushing it down and almost equal pressure from the bulls pushing it back up and settling in this area, and then it sold off hard. So what do? Maybe you put an order in just below the low here, expecting to go higher, and you'd be wrong. And that's where I get into trouble. I get in trouble with my bullish bias. Why I have a bullish bias? I have no idea, other than being told ever since I was a whippersnapper that the markets go up over time. So why even get involved in the short side? Well, there's money to be made on the short side. That's why. So we got a similar situation here, not exactly the same as this, but similar. And then you have another pop. And where does it hit? The 127.2. And it's leaving a little bit more in terms of a touchback situation. Closed up here. Basically, at some point, it's going to touch back here. That's if it leaps higher. And we'll see the next two candles, because unfortunately I can't do one candle at a time with what I'm trying to do here. But look at the whipsaw on the anchor momentum. Comes plunging down and comes ripping right back up. That's some serious volatility in my book. Okay. Comes right up to the 161.8. Now, could you project that happening? Yeah, well, if you work in the fibs, you'd say, okay, you give me the 161.8, I'll get out. And you would have gotten out at a hell of a spot. Once again, with history, being able to look at history. And what do? On the next candle, you find support on the 141.4. So you've established a trading range based on these two touches. Does it bounce within the trading range, or does it rip higher? Given that it's been, moving significantly in terms of higher and move lower here. This is flushing out the weak hands. People just like, I'm not dealing with this. Gold topped. It's topped here. Look at the movement to the downside. I'm out. And if you got in here on the consolidation and didn't cash out here, and then it comes down subsequently lower than the consolidation, you're worried a little bit, just a little bit, because it looks like things are going lower. No, things are going higher. The channel's telling us that things are going higher, and they do. This was a great buy-in right here, and you would have been rewarded significantly if you hung in. And you're still hanging in some ways, given that you're within this range with these two candles, that is. But they're two daily candles. A lot happens within a day, as we'll see when we go to, the 30-minute quick. And then I got one last stop before we wrap it up. And we're at 38 minutes. So I'm already over what I'm trying to do in terms of make these shorter, because it seems like people are bailing before the end. It's like a good movie. You got to wait. You got to wait for the end. You don't walk out of the theater before the end. You don't know what's going to happen. Maybe you missed the best part. All right. So we go forward. Boom. Took off. So this trading range didn't last very long because it jumped. And that's where we stand. We're dealing with the right-hand part of the chart right now, because this is yesterday's price action. And here we are today, somewhere in this vicinity. What happens? It's outside the channel. It can stay outside the channel, especially when it's this strong. It's made this kind of move to the upside. But this is where I say too much too fast. You got all these areas in here that are lacking structure. You need structure. You need price. Even when it's jumping around in here, You get a little bit of structure. You get a lot of structure here in the sell-off. But I think you're dealing with it. It's got to come back in. It doesn't have to do anything. It could just go to the sky. Kind of like those tulips back in the 1600s. The market just went to the moon. They didn't even know you could go to the moon back then, but it went to the moon anyway. So that's gold. That's a daily. We step down to the minute, the 30 minute, and what do we got? We got a strong move to the upside. Got as much structure as you're going to need to establish the fact that it's to the upside, which is interesting because, well, it's only one day, and that's what this is reflecting. We're taking this and we're blowing it up to 30-minute bars or candles. Come to the top channel, sell off, consolidate, whatever you want to call it, digest to the bottom channel, and now it's working higher again. Maybe not at the same fevered pace that it was over here, but it is. And in terms of fibs, it blew past the 161.8, didn't touch back. So at some point, 32.62, maybe it comes back and revisits. That's almost 100 points down. That may not happen anytime soon, especially with this market going the way it is. The gold market, that is. Then we got a 200% fib, and it's just, first of all, it blew through, but it came back down to test. And not only tested, consolidated down to the lower channel. And what do we got in terms of my favorite indicator, the anchor momentum? Showing the strong move to the upside here, then it flattens out, and what do you get? You get a little divergence here. But you got bigger divergence further on down the road, because you got this at the highs here. And then you have the high here at the top here. So you have significant high to higher, and you got high to lower. Bearish divergence, down it comes. But where's it coming to? Not that far down. Far enough, but in terms of the overall, maybe you hold on for this. Maybe you're kind of regretting that you held on when you get a down candle like this. And then it fails to go higher. And that's why you need to move down lower. You got a lower high here. Lower high, say goodbye. Bam, down it goes. But you're coming back around on the anchor momentum. You got the red line just crossing over the green line, and you got the green line rounding and coming up with it. So I'd imagine gold, the way I'm looking at it on a 30-minute, we're going higher from here. So that means it stays outside the channel on the daily. And it's approaching 360? No. 3360. Thank you. And it's currently at 3343. So we're 17 points away from dealing with the 200 fib on the daily. And that gets us right back up into the levels it was trading at. How is that possible? What am I looking at? Let's see. No. I'm not extended hours here. That's why. Extended hours is showing that it's already hit the 200. That's what confused me. At 200 here, I'm saying, wait, how could price action be here on the 30-minute, but not here on the daily? Because it was. Now, you had a little consolidation going on here. Currently, you have a little consolidation going on here, but at a significant fib level. We got like a little wedge almost. This line coming up, this line flat here, price contained within. Just put it in one cancels other. For above the 200%, you're willing to go long, and you're willing to get short on a breakdown below. the upward trending channel. And looking for maybe, if you do get short, you're looking for some sort of retrace like this. Now, if you only get this, you're in trouble because gold is bullish. And it's just taken off. And therein lies my bullish bias once again. But maybe working with a bullish chart, my bullish bias works out. And the little bear within me is not saying, look, you can make some money on a retrace here pretty quick. I don't think it can be greedy and survive. Just gotta say no. I'm gonna let that go. That's a dip. And this is the trip. I was saying before, somewhere along the way, sell the rip and buy the dip. Don't buy the dip on all the downward trending markets right now, because the dips end up being lower and lower and lower, and you get caught. Sell the rips. You don't want to sell the rip in gold. Too strong. I mean, you could capture a little bit if you're day trading, but I'm trying to push things out and be a swing / position trader. So I think the bigger money is made that way when you can hold on tight. Got to deal with the emotions. That's where my favorite book comes in. Jared Tendler's Mental Game of Trading. A system for solving problems with greed, fear, anger, confidence, and discipline. It's a great read. Check it out on Amazon. I did put in the comments on one of the episodes, or one of the editions, or whatever you want to call it, in terms of all the particulars, the links to the book on Amazon. And also shout out to Audible. It's on Audible, which is nice. If you don't necessarily read, I used to read constantly. I read everything, anything I can get my hands on. And for some reason now, I don't read that much. I think it's because of the internet. You're just so used to bouncing around so quickly, your attention span gets bushwhacked. But you could sit and listen to Mr. Tendler reading his book and just getting the pertinent information that way. So there's that. Okay. So that's GC, that's gold. And do we do long term on gold? You know what, I'm going to leave it at that because we're currently at 47 minutes. And I want to wrap up with one more thing, the dollar. $DXY, the dollar index. So let's go out to the macro. And it pulls up NQ again, except I want $DXY. All right. Now you can look at a daily chart on the dollar and just say, oh man, the dollar's just plunging. Dollar's going down. And you would be right. It's going down. Given all the uncertainty, given the negotiations, given all the stuff that's going on around tariffs and so on and so forth, the dollar's taking a hit. And we go out to the monthly, what are we looking at? We're looking at the current 3 months, or the current quarter. And the dollar's come down hard. It's accelerating a sell-off. Usually when you get a big move, then the next candle you get a little bit slower, it loses momentum. And that brings in our anchored momentum chart. You had a hell of a run from, 2021. Just took off. Came outside the channel. came significantly outside the channel, and then came back in. And what's it been doing? It's been consolidating sideways. Been digesting the move. And you had a hell of a move here. Now we're going to digest it. And then you had a little bit of daylight. Maybe it digested enough. Didn't come to the lower channel, but it digested it enough to make a strong move to the upside, breaking these prior resistance points. And the 423.6 fib, leaving a touchback, which it satisfied here. Well, it initially satisfied here, but the fib failed. Or not the fib failed, but the support of the fib failed here. Down it comes. So once again, touchback wise, it's coming back up to here at least, which would be a lower high, and then say goodbye. But currently, like I said, it's accelerating. You look at the bodies of these candles, you got this one, okay, bearish engulfing to the doji here. Then you got acceleration here to the downside. They have even more acceleration here. As opposed to the sell-off here, you had a big move to the downside here, and the momentum started slowing down here, and then put the brakes on a little bit with the move to the upside here, and start chopping sideways. So the question is, on the right-hand side of the chart, what does the dollar do from here? Well, I think you got support coming in terms of the lower channel, and also the 200% fib. I think this becomes a support area. I don't think the dollar's going back down to, what was it, down at 70? If I pulled up the historical, if it has enough data to show it, just bear with me for a second. Okay. Let's just go further out and see what we got. We'll do a max monthly. Okay, what are we going to? 2005? All right, we got 20 years worth of data here. You can work with that. And what do we got? That's what I was thinking, somewhere around 70. And that was the low in 2009. That's after the financial crisis. Of course, the dollar's going to be hurting as a result of the financial crisis. You got a bunch of friggin' knuckleheads just taking as much money as they can possibly get and then putting the rest of the friggin' planet in jeopardy in terms of a financial crisis. Friggin' meatheads. Track them down, take all their money away from them. But nobody's charged. Nobody gets blamed. Nobody gets anything except the taxpayers. They get to pay royally for bailing out friggin' crummy decisions made by jackasses. Okay, well, I'll get off the soapbox again. So we're at 70, and we have a high here at 114. That's not the high, though. The high was back around 2000 or so. I think we're up over 120. And then you had the bear market, 2000, 2003. And that brought things down. So what do you have? You've got the 233 just clearly saying down, 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 down. Until what? Until you get a breakout here. And you broke out, and what did you fail to do? Failed to retest the 233. So what do you have over here? You come back down and you retest. And then you test again. And then you got just a little higher low here. You got the low, you got just a little higher low, and off you go. Boom. So now you're consolidating. So where does it come down to? Well, I don't have the channel here. I mean, this is a monthly of a lot more data, so I'm not looking at the same channel, but I am looking at the 200% fib at 97. and I've got an ascending 233 EMA at 95 and change, maybe somewhere between 97 and 95. It finds the base, tests support. I mean, it tested support here, got underneath and still took off. Tested support here and took off. And if you jumped in based on the breakdowns here, you might have been caught with with the tie going out, and you don't have your swim trunks on, so you feel a little exposed. But the fact remains that it took off each time when it roughly tested what is a line here, and maybe that's just it. Maybe this isn't a line. If I could somehow draw a channel that approximated the 233, and that's something I have to look into. That would be a better idea than just having a line and having a breakdown, and that throws you out or throws you off, because after the sell-off that you have here, you're thinking, oh, it's going lower. No, it's going higher. A little sell-off here. Oh, it's going lower. No, it's going to bounce, then it's going to go higher. And what do you got? You got a low here. You got a higher low here based upon looking at the programmatic support and resistance. Then you got a higher low here. And this higher low, good enough to go. Bam. Now, interestingly enough, once again, we got a little situation here where we didn't get quite a touchback totally on the 233 EMA. So maybe that becomes a target for the front end here. And we're happening months at a time. So it's going to take time for this to go. And lots can happen in the meantime. But looking at the anchor momentum, it's doing its weave up and down, up and down, up and down. But look at how crazy it's getting over here. Look at the red line shooting up high, then cracking down low. And the green line is just kind of threading the zero line. So maybe it's just reflective of just the craziness going on here. And maybe it's not reflective of the overall state of the dollar. We shall see what we shall see. So that's the dollar from a max point of view. Now if I go back, restore the cells, and I've got a 20-year here. I want to fix that. Just hang tight. Go back to 5. Okay. For some reason, I feel the need to have these candles kind of look like these candles in terms of overall width. You know, I could just leave 20 years here, but it's not helping. I think to zero in a little bit. 5 years is more than enough candle action, I think. But, so we got the macro, what I was calling the macro here with the daily and the monthly. Now let's go down to the micro and just see what's going on. That will be the daily and the 30-minute. And we got NQ once again, defaults to NQ. So I just go to recent and I go to $DXY. And what do we got? Why are these candles so big? Because it doesn't have extended hours on. I'm going to put extended hours on. Okay. So we got a daily with extended hours on. Let's just take a look-see at what it looks like without. Doesn't show any difference, which is interesting. Now, why is that? I think that's because the dollar is continuous. The dollar just keeps going and going and going. I don't know when it takes a break. I don't think there's like a break like on the futures. You have a break from 5 o'clock in the afternoon to 6 o'clock when the next day's market starts up. This is an index. It's not a futures. So as an index, I guess it's just continuous. And you know what? Feel free to correct me if I'm wrong. Put something in the comments saying, hey, bonehead, you don't know what you're talking about. Always looking to learn. Always looking to learn. So we got a micro situation. We got the daily, we got the 30-minute. I haven't done much with this other than apply the fibs. But right away we could see significant movement downward on the daily. And what is the anchor momentum saying? Same thing. All you got is basically movement, and you got the fast line, the slow line, both underneath the zero line, and you've got no movement to the upside. I mean, you got a crack on the fast line, the red line. Interestingly enough, cracks there, which is the top of the channel. Down it comes. Cracks above here. Got a retest of sorts before it comes down more significantly. Down it comes. Got a crack here. Bring it up. It's outside the channel. Lower high. Down it comes. Boom. And here you got the crack of the green line, the slow line, cracking below the zero line. And what's interesting is it actually retraces and goes higher, but fails. And down it comes. Now, a 30-minute on the dollar, it's kind of really tight in. There's not a whole hell of a lot to look at, other than it also is coming down. But this is over a span of, it's 1 day in aggregate. It's all basically 1 day, except it's 2 days in terms of, what's currently happening in the current session and what happened in the previous session. And the thing I don't know, I have to do a little research on, is how long is a dollar session? Is it 24 hours, 365? Or is it basically, like the futures, has a brief moment of no trading, no action. It gathers itself for the next session, trading-wise. So we just cranked over an hour. We're at 61 and change. And I've touched on everything I want to touch on. The problem is that we're an hour long. And I don't know how many people are going to see the end of this. But if you did hang in there for the whole hour and watch what I'm looking at, and I'd be interested to know what you're looking at. So feel free to put a comment in there and just say, hey, you didn't see this. You got to check this out. I'm always looking to learn. Always looking to learn. So therefore, I would be interested in what you have to say. And maybe somebody will say, you can't go this long. I can't sit around for an hour and watch what you're talking about. And that's why I've been trying to go shorter. But when you come to certain important things, at least what I think is important to me, I take the time necessary. Just slow down a little bit. Slow down. That's why I'm not looking at 5-minute charts. I've had a tendency to basically focus on 5-minute charts. And it's the longer term that helps you get a better sense out of what's really happening. So now I look only at 30-minute, even though I want to look at 5-minute. There's that little voice within me. Look at the 5-minute. Check it out. It helps. More price action gives you a better idea what's going on. And I say, no. I think the 30-minute works just fine. Plus, it takes the pressure off a little bit. I'm not sitting there focusing on the computer all the time. Bop, 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 5-minute, 5-minute, 5-minute. No. 30 minutes. Up and down it goes. One candle goes up and down. But I found it to be better. So that's what I'm sticking to, and I'm going to stick to it. And I'm going to wrap this up by saying thank you very much. If you find yourself at this point in the episode, in the edition, then I thank you for doing so. And whatever you're doing, I sure hope you're having a profitable day doing it. And I shall talk to you. And I would say good night, but it's morning. So I'll say good morning. Grab a cup of coffee. Breathe in the air a little bit. and then get to work. All right. Good morning.